Hello and welcome to Capital Ideas TV. I'm Mark Bunting. Promising growth stocks in Canada are sometimes like needles in a haystack. They can be tough to locate, but those investors fortunate enough to find one will never want to let it go. And that's the feeling around Medexus Pharmaceuticals, a specialty pharma firm rapidly expanding its sales in Canada and the US. It's the hidden gem hiding in plain sight thanks to a game-changing merger. About a year ago, Medexus completed a three-way merger with Pedia and Pharma. The tie-up gives the combined company 22 products in Canada and one in the US in various areas of healthcare, including rheumatology. The game plan is licensing existing drugs and selling them to hospitals and pharmacies. The strategy has been effective so far. The main products for Medexus notched impressive growth in the most recent quarter. Sales of the rheumatoid arthritis treatment Medexus more than doubled from a year earlier. It's a similar story for the company's allergy treatment Rupall, which jumped nearly 70%. Medexus has also negotiated very low upfront payments for the drugs it licenses, meaning sizable profits and profit margins for the company. Medexus has big ambitions for its diversified product pipeline, and with $27 million in cash on hand, it's ready to make a splash in new markets, specifically the US, when the opportunities present themselves. CEO Ken D'Entremont stopped by our studio to explain the company's plan to create a leading specialty pharma company. So Ken, Medexus Pharmaceuticals focuses on existing drugs. So why is that an attractive model for you?
It's an attractive model because a lot of the risk has been taken out of it. These are molecules that are known or have been launched in other territories. So we feel that the risk of getting them registered in North America, launched in North America, and being successful here is quite high. So we like that business model.
Let's look at the most recent quarter, which came out a while ago. Tremendous sales for Medexus, for example, triple-digit numbers there. Give us a sense about Medexus, Rupall, Rasuvo, and the sales and the addressable markets you're looking at there.
Those three are really our revenue drivers. Those are our three largest products. They're also our three strongest growth products. Rasuvo, being a US-based auto-injector of methotrexate, is growing at 14% year over year, and that's 4 years after launch. So it's about $34 million, but that market is $400 million. So growing strong, but still relatively small market share. Medexus is the same product in Canada with just a different brand name. That's growing 122% year over year. And again, we've got full reimbursement for that right across the country. So we expect that to continue to grow strongly. And Rupall is growing at 96% year over year. So all three products are doing extremely well, and that will continue.
I noticed that Canaccord Genuity recently started coverage on Medexus Pharmaceuticals, and they say that they think the company is in the beginning of several years of double-digit growth, and that EBITDA margins could go from single-digit, where they are now, to as much as 25%. What do you say to that?
Well, I think they're right. Clearly, with strong revenue growth and a gross margin of roughly 65% and flat expenses, the faster we grow our net revenues, the more of that drops to the bottom line. So clearly, our EBITDA contribution is just going to get larger as we go forward.
One of the keys to the company, of course, is the sales force, the relationship with physicians and pharmacies. Talk about that strategy and the approach there.
That clearly is our key promotional tool. I mean, we've got full commercial infrastructure in both the US and Canada, big sales force in both the territories. So our biggest task is getting more products for these people to sell. The more product we give them, the more efficient they are when they make calls on physicians and hospitals.
So your sales split right now at Medexus Pharmaceuticals is roughly 60-40 US to Canada. You've got a real push on in the US. What's the strategy and the approach to grow that market?
Yeah, if you look at our portfolio, we have a lot of drugs in Canada. We've got about 20 different assets. In the US, we have Rasuvo. It's just a single asset. So our big push is adding additional drugs to the US portfolio. As we do that, clearly we'll make that organization much more profitable and it'll make a larger contribution going forward. The US is the largest drug market in the world. So adding product to that portfolio will have a big impact on our business.
So you've talked about the strong organic growth at the company. You're also sitting on $27 million in cash, and I think the markets are excited to see what you might do with that. You say you're very active in business development. I know you can't give too many details, but what's in the pipeline? What can investors look forward to?
The first thing they can look forward to is us realizing some of the potential in the ROFR from Medac GmbH. If you recall, as part of the deal with our German partner, we have a 12-year right of first refusal on everything else in our portfolio. There's a couple really exciting drugs coming down that pipeline. In addition to that, we'll deploy the $27 million against licensing and acquisitions of new products. And we've got 3 term sheets on the table now that I believe we will close.
So will investors wake up fairly soon and see a news release of a fair-sized deal?
Certainly hope to have something done within this quarter, before the end of the year. I think it'd be really important for us to add another product to the U.S., add some exciting new products to the Canadian portfolio.
The market cap on Medexus Pharma right now is about $60 million or so. What's your vision and how big can that get?
It can get much bigger. You know, we're showing strong 20% plus organic growth from existing portfolio. Much of it is in the growth phase, as that will continue for some time in the future. Plus, we're going to deploy that $27 million cash to new products. So I see us growing from $75 million roughly today to $250 million net revenue, $500 million net revenue. Then we'll have sufficient scale. That's where we ought to be with the type of organization that we've got.
So ambitious plans there, Ken. Now lastly, insiders own about 15% of Medexus Pharmaceuticals, so you guys have skin in the game. The specialty pharma sector in Canada has been tricky the last few years. You think you're undervalued, of course. So what do you say to convince investors that they're looking at, right under their noses, they're looking at a really good Canadian specialty pharma that they need to pay attention to?
Our business model is totally different from previous specialty pharma companies, which were really looking at legacy, mature products. Our business model is very much about growing and launching new products, organic growth. So that is a very different business model, one that's proven out to be very successful in the past. So I think investors, if they get into our story, they'll realize the downside is protected. We're already EBITDA positive. We have cash in the bank, strong revenue growth. So it's a very unique story. I think now is an excellent time to get in. We are buying back our own stock, so clearly we do think it's undervalued. And management is buying back stock. So clearly we do have skin in the game. We believe we have excellent prospects going forward.